Let me say on stable coins, if I can.
Yeah.
I do share the concerns that you hear here, but I also think it's a positive step that we don't have a regulatory framework for these now in the United States. We tried very hard in the last Congress to work with, people on both sides of the aisle to create such a thing. Now it looks like we're well on the way to creating a framework, which I think is something we need. If we're going to have stable coins, and apparently we need to have a federal and state level regulatory framework, which I think we're making progress towards having.
Doge is going to look at Musk. And if Doge looks at Musk, we're going to save a fortune. Thank you very much, everybody. I don't think you should be playing that game with me. Mr. President.
Chair, would the Fed have cut more by now if it weren't for the tariffs?
So I think that's right. In effect, we went on hold when we saw the size of the tariffs and essentially all inflation forecasts for the United States went up materially as a consequence of the tariffs. So we didn't overreact. In fact, we didn't react at all. We're simply taking some time. As long as the U.S. economy is in solid shape, we think the prudent thing to do is to wait and learn more and see what those effects might be. And again, they haven't really shown up. So for now we're waiting.
Yes, the most recent news, of course, is that yesterday we announced that Circle has pursued a national trust charter with the OCC. This, in many ways, not unlike the IPO that you had commented on a moment ago, is the consummation of a very long-standing company objective to race to the top and to continue up-leveling the activity of payment stablecoins here in the United States. Of course, as you know, the OCC charter, it's also expected to be a future requirement of U.S. payment stablecoin legislation, the Genius Act, which would create for the first time ever a federal framework for this activity in the U.S., but also do so in a manner that allows for state-based competition and more optionality in the U.S. payment system.
So we think we'll move from a rolling recession into a recovery, but what happens early in a recovery, if you will allow me to call this that. I know many people think we never went into any kind of slump, but we have sector by sector.
How much we've been collecting in revenues. And I did this in part because Wilfred's here and he can talk about the UK trade deal, but just this is the monthly numbers. And they have gone up a lot. June is actually set for another big increase of $27 billion. That is money coming into U.S. coffers from tariffs. We are collecting a lot of revenue. So far, guys, $121 billion has flowed into the U.S. government since the start of the fiscal year. It's still a tiny portion of the overall revenues that the U.S. government gets, but it's increasingly a lot. Especially, we haven't seen it in terms of the consumer paying off higher inflation.
Yeah, as you said, Senate narrowly passed Trump's mega bill and that multi-trillion-dollar tax package. It now, of course, heads to the House. Now, leaders are teeing up a potential vote tomorrow. That's when they want to get it done. That's when members are coming back. But before that happens, there's likely going to be a little bit of negotiation and a little bit of arm twisting going on because we're already seeing opposition in the House to what the Senate just passed. Lawmakers, they're also trying to process everything that was just passed as far as this $3.3 trillion package. That includes some last-minute changes made just hours ago. Those include a number of things with those clean energy tax credits. Number one, it scraps a proposed tax on wind and solar projects that source parts from China. Then it also allows these wind and solar projects to access tax credits so long as they begin construction a year after the bill is enacted. But those two changes, as well as a couple others, are already angering some of the fiscal hawks here in the House. Congressman Chip Roy tweeted that the changes that were made in the Senate for the green energy tax credits are a deal killer of what he said was an already bad deal. Congressman Ralph Norman also told me that he's a no, and he tweeted that the spending provisions in this thing are massive and will blow up the deficit. We can't keep mortgaging our future.
Welcome to the Crypto Teacher. And I come back with that video just to make you think.
Don't forget to like and subscribe to the channel.
And make sure you join the Patrons. If you're not a part of the Patrons, make sure you're hitting the Cash App. Also, go like and follow the TikTok. More videos to come. And we have Jerome in the house. And as you can see, no one was wearing the royal colors and also no ties. But Jerome Powell on stablecoin framework. is finally coming. And we know these stable coins are the foundation of this new digital economy for the central banks. It's going to give the central banks even more power because these stable coins are on blockchain, and with a smart contract, they're programmable, being able to tell you what, when, and how to buy, and you have 3 to 6 months to spend it or poof, it's gone. And we definitely know that's biblical. And the EU already has the framework. And we have Trump and Elon playing the Hegelian dialectic, and they're going to ride this in the fourth industrial revolution. And remember, the crypto teacher told you. And we have Jerome Powell on the Fed pausing. And we know he wants to keep rates high for longer, so this legacy market crumbles. And I didn't pull a clip, but they talked a lot about being in a fragmented world. Remember, guys, they have to break up everything in this legacy market, so AI and the machines are the fix for this new digital economy. But as these rates stay high, remember, we're paying $1 trillion just to service the debt. We have to refinance almost $10 trillion at the end of the year, so we know we're going to get some type of entertainment, and it's going to be big. And remember, the crypto teacher told you. And we have Circle wanting to be a fintech bank. And in the Genius Act bill, it is a requirement because we know the Fed is still going to be in charge of the money supply. And remember, the crypto teacher told you. And we have Kathy Wood admitting that we are in a recession. Said it's a rolling recession, but we're definitely in a great depression. But she says a rolling recession into recovery. But we're a long way from recovery. Only thing you have to do is go to the Fed website and you'll see the consumers are hurting. The stock market is nothing but an illusion. And remember, the crypto teacher told you, just ran by an algorithm. And we have all this tariff revenue coming in. And like Jerome Powell stated, somebody's going to be paying for it. And most likely a lot of it is going to be the consumer. And we know that is definitely a fact. Until they can get these machines in to increase productivity, it's going to weigh on the consumer. And we have the Senate passes the big, beautiful bill. Remember, guys, Democrats and Republicans, they always fight over everything. But when it's time to move the NWO agendas, they always come together. Life is about to change. And don't forget, Trump has about 2 years to get everything moved in, and then they can go back playing the Hegelian dialectic once midterms come. But if you look at this bill, it gets the fourth industrial revolution moving like a locomotive, and then also it cuts the bottom. The lower class is getting wiped out. And never forget, they ran a simulation during the C word, giving people free money to sit at home, because the bottom half are the ones that are going to act up because they have nothing to lose. And that's the reason why you give them the free money. And they'll sit at home and be happy to go inside the virtual world, the metaverse. And remember, the crypto teacher told you. And this big, beautiful bill, about $3.3 trillion. Yes, you heard that correct. And then also it raised the debt ceiling. Like I stated, it's moving this fourth industrial revolution like a locomotive. And then, guys, we have the dollar just keeps getting weaker. And with all this money spending, that's just going to make the dollar even more weaker. And we have all that foreign money moving out the United States to the emerging markets because they have the most upside. And we know no one, absolutely no one, wants this long-term paper except for the central banks. And don't forget, if they try to make these stablecoin issuers buy the long end, because remember, stablecoin issuers are buying the front end. But if they have to buy that long end, we've seen the movie before. Everything is going to blow up and then end in the hands of the Fed. And remember, the crypto teacher told you, because he knows when it comes to the NWO, it's all planned out. You have a wonderful day.
Says the budget bill could push the dollar even lower after its worst start to the year since 1973. Let's bring in former Bridgewater chief strategist Rebecca Patterson. Rebecca, great to see you. Great to have you on the show. In addition to the spending bill, there are other factors why you see a weaker dollar going forward.
Yeah, well, let's start with the spending bill. We're not at the finish line, as we just heard, but if we get a bill something like what we're seeing today, we're looking at a debt GDP ratio in the U.S. that's going from a current 100%, which is already incredibly high, to something closer to 125% of GDP or beyond that in the next decade. What that means is that we're going to have to issue more and more treasuries to cover these budget deficits along the way. And so if we have more bond supply without the same increase in demand, we're going to have higher borrowing costs, and higher borrowing costs are going to slow the economy. A slower economy, all else equal, is not going to make the U.S. a very attractive place for capital. And that's going to mean less foreign money coming to the United States and less demand for dollars. So you can tie what's happening on the Hill right now in part to what could happen going forward with the dollar. So yeah, the dollar on a trade weight basis, so as against a basket of counterparts, is down about 10-11% year to date, more so against specific currencies. So it's weakened a lot already. I think it started from an overvalued place. So there's more it could fall before the dollar becomes absolutely cheap. You're right to say that historically a weaker dollar has been good for multinationals. I would caveat that a little bit, though, because the big companies have very sophisticated hedging programs. They try to remove as much as possible of currency swings so they don't affect their earnings one way or another. And there's also a causality issue. Historically, yes, earnings per share growth speeds up with a weaker dollar. However, you have to think about what's causing that. If the Fed is cutting interest rates and that weakens the dollar and lifts growth sentiment, that could also lift earnings per share growth sentiment. This time, that's not what's happening. The dollar is weakening a little bit on Fed expectations, but mainly because of a reallocation out of U.S. assets by investors. And we see that in the flow data that's getting reported for the last couple of quarters. So it's not the same cause of dollar weakness that historically has been good for growth sentiment and good for U.S. stocks. If we have a weaker dollar and we have worries, to your point, Tim, about putting as much capital as investors have for the last 15 years in the United States, you are seeing some green shoots in places like Germany and Europe more broadly. Not surprisingly, their stock markets are doing much better than the U.S. market year to date. And we did hear from the European Central Bank today that if the euro keeps strengthening to, say, 1.20, that would start to create some concern for them. So I think there are winners in this to a degree. Too much currency strength can be a bad thing. But right now for emerging markets, Tim, I think we have been in a pretty good place. There are some challenges, though, like countries like Taiwan. The Taiwan dollar strength has created headwinds for the country. They're intervening the other way to try to limit it. In Switzerland, Swiss franc strength has led the central bank there to cut interest rates to zero. Hong Kong is intervening to try to protect its currency peg with the dollar. So yes, there are some winners, relatively speaking, but we have to be careful. If the dollar weakness continues, and especially if it's quick, you can lead to some stresses in currency markets that could spill over to other asset classes. I don't think we're looking at a currency crisis tomorrow, but I would keep it on your radar screen that these stresses could build and become less of a winning combination and more of a global instability situation.
Going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
And so we'll import Chinese-based CBDC technology. So it's going to be CBDC in a box provided to you by the People's Bank of China. But every stock, every bond, every currency, every commodity, every piece of art, every private business, every piece of real estate will eventually be a token on a blockchain, an entry on a ledger, permanent and immutable. We will have truth instead of trust, and we will save over $7 trillion a year. 6 to 8% of global GDP is wasted by the friction of the trust industry that's necessary when you have dual entry accounting. With triple entry accounting, which is what a blockchain is, we get rid of all of that friction. It's a beautiful future.
Like what you see in China and their social credit scoring systems, right? If we get identity wrong, it could be a tool to enslave humanity. And if we get it right, it could be a tool to liberate humanity. And as an American, I'm obviously rooting for the one that's on the side of freedom.
Bitcoin is an international asset. And also, I do believe the role of crypto is it's digitizing gold.
I actually believe this technology is going to be very important. Look at it. We have been part of a huge revolution in investing through ETFs. We believe that ETFs will be changing the whole way we invest. Many people still use it as a means, people are investing it for indexing. No, the majority of people who are putting money in in ETFs are active investors that are buying exposure. The entire bond market is being transformed as we talk right now. I believe the next generation for markets, the next generation for securities will be tokenization of securities. And if we can have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code of who's buying, who's selling, instantaneous settlement. And think about it, it changes the whole ecosystem.
Chinese bank ICBC has been hit by a ransomware attack, and the U.S. Treasury market, as a result of that, has been disrupted. This, according to the Financial Times. We're getting it more right now with Bloomberg's Shonali Bassick. Shonali, what do we know?
Listen, we have the Financial Times now reporting that ICBC, one of China's largest banks here, was hit with a ransomware attack. And remember, they're a very significant intermediary in the Treasury market. The SIFMA has told its members that this has been part of the reason here that the system is kind of clogged up, if you will, during that auction that we saw a little bit before. The attack had prevented ICBC, according to the Financial Times, from settling Treasury trades on behalf of other market participants. A large executive at a major bank also telling the paper that such a large party on the fixed income clearing corp creates major concerns, potentially impacting the liquidity of Treasury markets.
Now, it was not just a poor auction. It was absolutely lousy, and when the dealers have to step in to save a treasury auction, that's a rare occurrence. And
Cryptoteacher and the New World Order book, plus the 3 kids books. It's time to re-educate. Also, new to cryptos, Coinbase, Bitrue, Binance. Do not forget book links and crypto links are in the description. The stock channel, guys. Don't forget to go like, subscribe, spread everywhere. You have your Kobo, your chip stocks, your banking, your gaming, while everybody's sitting at home, get on stocks, the Seaver, the biotech stocks, and while everybody's at home wishing they were still getting that free money, what are they doing? Drinking and smoking weed. Don't forget about those stocks, and you have a wonderful day. The most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids books. I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate, not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, So therefore, we can start the re-education now. Because as we see, the fourth industrial revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Grandma Tam save the village. Part 2. King Joshua and Grandma Tam save New York from COVID-33. Part 3. King Joshua and Grandma Tam goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.